G'day, mate! So is this streaming? Alright, cool, because I skipped all that nonsense that YouTube used to make me do a few months ago. They changed things and all of a sudden I had to do 10 times more stuff. But now, looks like it's working. Huh. Well, something to be thankful for. There are plenty of things, and that is one of them. So without further ado, let's go! Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma! Hi, my name is Wayne McDonald. Nice to meet you. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Thank you very much for coming to these webinars every morning. Traders Way is a sponsor of the Forex.Today YouTube channel. So if you are benefiting from these webinars, whether they're educational or entertainable, please pay it back. Please show your loyalty and respect by visiting TradersWay.com. Open up a demo account, test out the execution speed, test out the spreads, test out the swaps, test out the customer service. You'll find that it's world-class, white glove, butler-style treatment. You'll be very happy with the prime broker to your new successful Forex trading business. Also, while you're here, please leave likes, please leave comments. The reason for that is you're telling YouTube that this is quality content that you would like to be seen on YouTube. So please leave those likes and comments. Much appreciated. If you want my chart templates, you can download them for $5. The link is in the description below. And without further ado, let's get on with it. Okay, so you can see over the last 24 hours, I'm up about 100 pips on the Eurozar, but I'm down 100 pips on the Euro Lira. Everything's washed out. So that's cool. I've collected my interest, suffered no volatility. How nice is that? Cool. So anyways, let's just, I'll back out, add some more time here. And you can see we got a series here of top, 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 but we're going into this range here. So it's going to be a real challenge and a real war in the middle of the holidays. What? But anyways, here's the trade. Trade is here. 2 standard deviations from the mean, and we're basically at the mean. So even though this is trending down, I'd look at this as favorable for me, but really not actually going anywhere. Okay? Because you got this tiny little thing and tiny little thing, but at the end of the day, we're just cruising around the mean. So you need to sell high or buy low, and right now we're neither high nor low. Morocco! Whoop, whoop, whoop. There's a place I'd like to visit. Love to visit Morocco. Oops. Yeah, I saw a YouTuber, he restored an old Ferrari Testarossa and put like 4x4 tires on it. So obviously it was altered a little bit. And then he drove it all over the Moroccan desert. Drove it for like thousands of kilometers all through the deserts of North Africa, mostly though Morocco. In his Testarossa. Why not? No, I will not be in South. I just don't have time. I just don't have time. I really want to come back to South Africa. Like I said, I'd like to start planning that I visit you guys all over the world on a regular basis. So one of the things I've kind of put into my informal business plan is that we do get-togethers. So even if it's just short training and mostly, networking events or something, but get everybody together. Maybe every 3 months be somewhere in the world, right? Do a European bash, do an Asian bash, do a North American bash, so on and so forth. All right. So anyways, yens are down. Yay! That's good. So anyways, stock market yesterday in the United States of America, they closed at all-time highs again. So that makes me feel really good because that's the thing we've been, I wouldn't say praying for, but that's the thing we needed. Okay? So like pound yen, for example, has stayed in the range. Isn't this a wonderful example of the markets moving sideways forever and ever and ever and ever and ever and ever and ever? The reason I teach that is I have found, at least in my own trading years and years and years ago, that it's these sideways moves that I tend to lose money on. So I had to identify this as being a problem for me. Okay? And then I had to come up with a solution, okay? Of like, well, how do I behave when I recognize a situation like this? And I told myself it's going to move sideways forever and ever 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 and never and never and never and never and never and never and all that kind of stuff. So it's served me well ever since. Now, pure mathematics is pound yen down. Yes, that is true. Now, isn't it also interesting, pure mathematics, that I said that these yens would not likely come down until the third week of November would be the very first opportunity, and I would for sure expect to be short this by the 12th of December. Right? So isn't that cool, though? You knew this 9 months ago. And see, what may have happened if you didn't know that is you might have been like selling here and selling here and selling here and selling here, knocked out of everything, and then selling here. And after doing this, because look, guys, this is October 15th. This is November 15th. Right? And we're on our way now to December, and it's still sideways. So what I have found over the years is that something emotionally happens in here. You try and you try and you try and you try, and it just never breaks. Right? So therefore, I've taught myself that it won't ever break. It'll never, ever, ever, ever break until it does. And then it's game on. So, and also, let's change colors here. Also, you really don't have any business selling a move like this. Okay? You have no, and by you I mean all of us. Nobody in their right mind should be selling this until it technically has turned bearish. Because by definition, this is bullish. So what the heck are you doing selling it and selling it and selling it? Oh, well, my MACD. Oh, well, this and oh, well, that. And dude, seriously. All we know, right? What do we know? We know this is up. We know this is sideways. So you really shouldn't be selling this until, at the bare minimum, you have a breach, pullback, okay? And even then, there's an extremely high probability that this is going to be a challenge, okay? So I don't disagree with this will head down. It's the methodology in which is employed in your selling, okay? Claudio says, what about Lagarde? Possibility, probably not. Okay. But so this goes to Claudio and everyone else interested in Lagarde. First of all, Lagarde was the finance minister of all of France. Right? Then she was in charge of the IMF. Now she's in charge of the ECB. She's capable. Second of all, central bankers in how you say in English. Central bankers excel at doing nothing. Okay? So nothing is likely to happen. No major change on the short term at the ECB. So don't get ready for a big shock. Now, if anything, the shock happens when Madame Lagarde, makes a mistake somewhere, like maybe a non-formal ECB event or something, but she'll misspeak. But even that, like I always say, that when you have a new central banker, get ready. They're going to misspeak. They're going to do something wrong. They're going to make a mistake, and that'll be the first market mover. I actually don't think she'll make a mistake. I don't think she probably ever makes mistakes. And if she makes a mistake, someone's going to have to die, and it's not going to be her, right? Like she's capable to that degree. So like, I don't think she's going to have a slip up. So I would get ready for a giant no change at the ECB, at least for a bit. Let's say between now and March, let's just say, I don't think she's going to come in guns blazing. Let's change everything. Let's get radical. Let's get radical. Right? No. Okay. Okay. So anyways, you stay with your fundamental bias if that's it, but ensure you are using sound technical analysis to confirm or deny your hypotheses. Do not bet. You are training yourself to manage billions of dollars. Okay? So do it right. Okay? Cool. So that's that. Kitty cat, any different? Well, we made it through the most challenging. Okay? This is where bears were supposed to have sold. Okay? We could still be preparing for an inside week, and that makes sense during the holidays, right? So an inside week would look like this. Well, and then S is down here. So even that doesn't even look like an inside week, but maybe if you're a bull. And as a bear, you're like maybe there, but bears were supposed to have already sold this. So this tells me there's no bears. Or not enough anyways. Okay, so as a bull, that gives me permission, like one more hurrah. Okay? So what I want is I want a big fat rally in the first 2 weeks of December before I jump out of the airplane. Prince Philip said, yeah, Lagarde's escaped a lot of scandals. You know, like, especially with the IMF. Do you guys remember how she got the job? First of all, she was qualified, but they were going to give it to a Swiss banker. I cannot remember his name. But anyways, he was all set to take over the IMF. And all of a sudden they like find a dead hooker in his hotel room or something like that. And I said to my wife, "Oh, that was like somebody did not want him at the head of the IMF." I'm like, that is just straight up black ops. Oldest trick in the book. A dead prostitute at the Marriott Marquis? Right? And all of a sudden, he can't be the head of the IMF anymore. You know what I mean? They're like, wow, black ops, faux show. So anyways, I thought that was just crazy. And then she came in. But do you guys remember that? Yeah. But yeah, no, like, I'm not joking. There was something like that. I forget what it was. A maid charged him with raping her, or it was a dead hooker and some cocaine or something. I can't remember, but I remember telling my wife, like, oh, that's just straight up black ops. So anyways, Lagarde came in and got the nomination, even though the other guy had the job. Falah says, hey, will the chart templates work if you trade what? Palladium? Yeah, probably. Yeah, by the way, Guy, Harvard gave back, they had like $3 million left of Epstein's money, so they donated it. Oh, there you go, Strauss-Kahn. Yeah. Black Ops is, how would you say it? Undercover military strategy. So anyways. Okay. Yeah, the Clinton Foundation. Okay. We're just moving along. It's doing its thing. Now, do you remember the days, guys? The days back in the day, you used to make all your decisions on a 15-minute chart. And you were worried about things like volatility, and there was luck and bad luck in your trading. Yeah, there you go. Yeah. You guys remember those days? And now we have things planned out for literally, this is 2 months now. Barry, I don't have Dixie. Leonardo says Argentina is F with the IMF. Yeah, but that's Argentina. So, Argentina should be extremely wealthy. That's it. It should be extremely wealthy. And then in its history, it turned socialist for a hiccup, and it's never been the same since. And the rest of the world is doomed to face similar outcomes if they move towards socialism. It's just, that's it. So anyways, guys, I'm trying to teach you how to plan your trades, right? And stay with your trades. And stay with your trades. And stay with your trades. Stay with your trades. Okay? There used to be this assumption that if you were going to trade Forex profitably, you would have to spend hours and hours and hours and hours and hours every day in front of your charts. You can do that. And it's a good gig, actually. I find it very interesting, very stimulating. But it's not necessary. Oh, yeah. I want to ask you guys for a favor. Does anyone happen to know, like maybe you record these or write these things down, but do you happen to know which videos I covered, like behavioral finance, money markets, and commitment to traders report? Do you happen to have a record of which videos where I go do a deep dive, like 20 minutes to a half an hour into those subjects? If you have, could you email them to me, wayne@fxbootcamp.com? All of them would have been within the last 2 months. TBM wondered about our pivot points broker dependent? Only in the sense of when rollover. Okay, so it's more like where is your broker server and at what time do they calculate rollover? So that would impact, let's say, daily pivots, but not likely weekly and monthly. Thank you. Thank you, Adam. All right. Let's move. I gotta move. I gotta move. All right, so let's break this sucker down. Are we at support or are we at resistance? Okay. So we know you cannot sell here. Now, we played this game just recently. We were here. Do you remember I highlighted all of this for you? That's the new sell zone. Remember me doing that? And then comes up here. Guess what you're supposed to do? Okay? So now that's occurred, and now we're back down to here. Which again now is great because here you cannot buy. No buy. How about no buyers? That makes more sense. And here there are no sellers. So what we've been showing you on this 4-hour chart for Eurodollar is that you always need to be 2 days ahead. Okay? You always need to be 2 days ahead. Okay? So if you're a seller, you need to sell where there are no bulls. If you're a buyer, you need to buy where there are no sellers. Okay? And then ideally you take it to another level and then you wait for evidence of bulls actually buying. So we got this 4-hour 21 in the way and all that kind of stuff. So the reason I write it down here is this doesn't mean sell and this doesn't mean buy. It just means there are no sellers at support and there's no buyers at bulls. So now you can use technical analysis to confirm or deny entry by sellers or buyers, because you're not supposed to be the first mover, right? So now you drop out of a 4-hour chart and go to a smaller time frame and look for evidence to support your hypotheses of, of this going up soon. So we're below the 4-hour 21. This is still very bearish. See, I never said it wasn't bearish. I just said there's no sellers. I hope you distinguish between the two. What kind of fool would sell this close to support? Okay. Okay. Prince, what I mean is we have a holiday today, but let's say on a Wednesday, you should already be anticipating what's going to happen Friday or Monday. Okay. So for example, when we were down here, I talked about you can't sell it there, but if I was going to sell it, I would look to sell it again up there. That's why I drew this for you guys. Okay. And then we looked at the swing trade. Oh, okay. There's an M2 to M4 up here. So if anyone does buy this, they're definitely going to exit here. And we already know it's a role reversal. So I highlighted it with multiple colors. I highlighted it. I drew range lines in here and all that kind of stuff. There's multiple things going on to say, hey, get ready to sell if you're a bear. So you look at this, that's all bulls, that's an exit for bulls. Okay. Okay. And then this retracement back in here is definitely bearish. And now we're back here, and this is another, can't sell it. Okay. But the thing is, you should know all of these things way up here. If you're logging into your trades now and you're oversimplifying by okay, you might make money half the time, and then the other half the time you won't make money. Okay, so I look at this and say, well, I don't want to sell down here if I was a bear. I want to sell high. So there's no way you could call this selling high. Okay? You cannot be selling it at 110.08. Come on. Right? But I could look for exhaustion this way. Doesn't mean I have to, but I could. Exhaustion and reversal. Okay? Now, being below this 4-hour 21 is very bearish. There's just not the right price. So I could plan something like this if I was a bear. So if this drops from 110 to 109.50, okay, then I will let it head back up to 1.0990 for me to sell. That's how I handle this situation. Michael says, can you talk a little more about not being the first mover? The thing is, we are not big enough to move the market. So if you trade up into, let's say you did this. Down, 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 up, up. I have it marked 2 or 3, 4 different ways why this would be a sell. If you sell here, you are a degenerate gambler. You're a first mover. Okay? You need to confirm your strategies using technical analysis. So when you're in this zone, Michael, you need things like reversal patterns. At the very least. Okay? This could be the lower low, lower high, double top scenario. That would be acceptable. So if you sold at exactly the same price, but 4 days later, it's a much better trade. Because you're playing the double top. Then, if you really zoom in here, guys, the way I teach you how to trade a breakout exists here. Okay? You could be short here, as well as here, as well as here. These are 3 legit entries. One here, which is the double top. Run here, okay, is basically a Friday front run. We'll call it a front run. And this is a breakout, right? All are legitimate, okay? So can you imagine, like, you didn't sell here, you didn't sell here, you didn't sell here, but now you want to sell down here? It's just fool's gold. And you're like, look, but the red candle. Dude, you're supposed to be up here, bro. This red candle, come on. Okay, come on. Okay. So if you were a bull around this 110, you would start looking for a reversal. Now you have this double bottom plausibility. You have a December front run off the pivots. You have a next week front run. That psych level's huge. Okay. But if I was a bear and I sold here, what did I expect? What did I expect if I sold here? Michael says, so you'd stay in all 3 trades. This is what I'm answering. What did you expect? What is your target? What is your trade plan? Well, lower low, yeah, but can we be more specific? Okay. We'd be down by, let's say, between 108 and 109. Okay. This made a lower low, retraced back to 111. So you sold it, and it should be on its way to 109. So am I still in it? Well, what was your plan, right? Okay. Yeah, I'm rounding everything out. It doesn't matter. The point is, you can be concerned about a double bottom if you're a bear, but the biggest thing is if you're a bear, the biggest concern is you certainly don't want to sell there, and you're very concerned that bulls will buy it. So you're patient. If you're not confident, then maybe you just exit. But why are you not confident? You were confident enough to sell here. Why would you not be confident here? Your trade plan clearly is a lower low because that's what price action is. And then you can refine that by using things like Elliott wave. You could use that Fibonacci. You could use pivot points. It don't matter none. But the thing is, you had a plan. So if you don't know where this is going, don't make the trade. Okay? So here's another way. This is clearly a 50% retracement. Okay? This predicts the middle extension. I know you can't read that, but anyways. The middle one, let me squeeze this in here. There we go. The middle one. You have a couple of choices, right? Let's do pink. This is the pink. This is the most conservative. This is the most aggressive. And because this is the middle pivot, it's not really an aggressive or non-aggressive. It's just somewhere in the middle. So we'll take this one. So we're on our way to 109.33. And then I see, oh, next month, which is December, that next month, the December M1 is 109 and 2 pips. So I'm like, yeah, 109. Yeah, good enough. So down, 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 up, up, sell, down, 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 take profit. Happy New Year! Take the rest of the month off. Woo! Okay, done. But you knew that last week. And the week before last week, I helped you prepare for it. That's what we were doing here. Because I remember the topic at that time was, this is where bears sell, this is where bulls buy. Okay, so anyways, that's that. Cool. Did we do oil? We did oil and gold yesterday. Oil, as you know, I mean, like, you have permission here on oil to get out. I don't know if you're going for R2 or if you're cool with M4, but I did say 58.5 all month, actually. If you want to use technical analysis to be brave instead of emotional, you know, instead of emotional exit, you have an emotional run. This pivot predicts this pivot. Okay? This pivot predicts this pivot. So look, it's holidays, man. It's holidays. You can bail on it here. No one will think negatively of you. But this pivot is trying to give you the strength to get to R2. This pivot's trying to give you the strength to get to weekly M4, which is $60 a barrel. So now we got a monthly target, we got a weekly target, and we got a psych target. And it's all the same thing. So do you have the guts to get from 58.5 to 60? That's your call, man. It's holidays. I don't know who else is going to be in this trade with you and all that kind of stuff. It doesn't really matter if it goes from 58.5 to 60. That's just pride, man. It's just pride. Leonardo said, should I trade with half the risk until the end of the year? Well, I did talk about this. Was it this Monday or last Monday? I recently talked about this, that you need to recognize that, I think it was this Monday. because this is a holiday week, you need to recognize that there is additional risk than a typical week. The risk is that your technical analysis just doesn't perform the way it normally does, because it's a self-fulfilling prophecy. But if you're the only person trading, there's less liquidity. So now the market has to stretch farther to catch a counterparty. Okay? So your spreads could be higher. Your technical analysis could be less accurate. Okay? So how should you handle this risk? I don't know. How should you? Okay? But the thing is that I'm pointing out is that you should recognize that there is additional risk. And you should think about it, and you should make a decision on how you would manage this risk. Cut your lot size in half. That's one strategy. Okay? Okay? Right? So the most important thing is you recognize that it's risk, because a big part of your job is being a risk manager. Danielle, I have no idea. Oh, are you talking about, Jim might be talking about FX Blue. Yeah, they have a backtester and stuff, but you have to understand, like, I'm not giving you, it's not a strategy or a methodology per se. I'm teaching you how to be consistent, because the market in general is, I mean, it's predictable, but it's chaotic. Like, it is predictable, but then it could also at times be unpredictable, because it's a form of chaos theory where there's so many variables, right? The finance minister of Japan, says something and the markets move. You just cannot account for everything. I remember one time the agricultural minister of Japan was charged with stealing money or fraud or something like that. So he took a sword and he stabbed himself in the stomach, saved the honor for his family. And I'm like, wow, that still happens? And the markets moved. And you know what? I did not have that in my trade plan. So it's one of these things, like anything and everything can happen. There's so many variables that our human mind can't actually grasp it all. So we could just call this chaos or chaotic, right? And sort of be done with that. So now, chaos theory says you can't understand the entire mass of data, but you can look for discernible patterns within the chaos. Okay? So instead, you bring the opposite of chaos. And this is a consistent, predictable, reliable behavior. And with that, in the chaos, you find your patterns, you find your timing, you find your place. You make money, and then when the conditions change, when the variables change, you walk away. And what this does is it puts you predictable and the market unpredictable, but then you only trade in scenarios, right, that, let's say, statistically or probably will work for you. And that's how you address the chaos. The opposite of that is you don't have a real strategy or a bias. And every day you walk in, and to you, it's like a new day. You might be a bull on the Eurodollar today. You might be a bear. And the decision-making processes that you use will probably change for that. Sometimes it's technical. Sometimes it's fundamental. Oh, some news came out. Oh, well, now I guess I'm a bear. I guess I'm a bear today, right? When you do that, you're combining a trading behavior where you're unpredictable and the market itself is unpredictable. And from that combination, you're looking for consistent results. I would offer to you that is mathematically implausible. Trillion to one. Okay. So is that back testable? I don't know. I'm asking for logic. Okay? Let's do logic. The markets are unpredictable, but you predictably behave in a consistent fashion every day. And every day you trade in that predictable fashion, such as if you are a bear on Eurodollar, then you only trade in bearish market conditions by selling at resistance. And let's say that only happens 40% of the year. 60% of the time you're not trading. But if the 40% of the time you are trading and you're selling in a falling market at resistance, the chaos has gone away. So that's the first part, okay, Daniel or Danielle? That's the first part that I'm offering you. That you start there, Danielle. And in 5 or 10 years of profitably trading, you will slowly improve and slowly adjust, and you'll start to recognize other patterns, things like maybe seasonality. Okay? Maybe you'll recognize counter trend trades and add them. Maybe you'll get better at reversals. Maybe you'll get better at your fundamentals and understanding of central banking policies and their messages to you and the sort of the inside trades, right? Where you're long-term long, but short-term short. But the thing is, okay, Danielle, 95% of retail traders don't get 5 to 10 years of trading experience. They blow up their trading account. So as your coach and mentor, that's my first priority, is to get you to survive the first 5 years. From that, then you can tweak and become your own trader, okay? But taking low skill, low experience, and unpredictable behavior that you provide and throw that in an unpredictable market with millions of variables, there's no way you're going to have consistent results. None. 0. Trillion to 1. So let's fix that. Let's start there. So is that something you can backtest? Well, let's put it this way. Let's say you backtest it and you have mediocre results. And you're like, oh, well, those are mediocre results. But you know what you're not calculating is the miserable results that you would have got otherwise. So if I can take you from a negative 50% return to a positive plus 20, you're like, well, 20%, that's not that good, Wayne. Yeah, it's better than negative 50 or negative 100, right? And then guess what? In year 2, you'll be plus 30. And in year 4, plus 40. In year 5, plus 50. And you'll get better every year with less and less risk, less and less volatility. And all of a sudden you'll be you'll be a happy camper by the time you get to year 5, right? So that's what I'm trying to get you to, okay? This is not sort of an apples to apples thing. Yeah. Yeah. So I wouldn't quantify it. This is a quality issue. Okay? Yeah. My number one goal is to help you survive. My number one goal, then my next goal is for you to be profitable. Okay? Oh, plenty of people follow. See, here's the thing. Like, what do you mean? Like, it's an interesting question, because what you're saying is you're struggling to find that success, and you're worried that you won't find it yourself, right? Because like what I do is not proprietary. What I do isn't complicated. What I do isn't a trick. Right? So, we're talking about understanding the basics of fundamental analysis, the basics and then advanced levels of technical analysis, and then things like patience and discipline and consistency. There's just no smoke and mirrors, right? So, it's like saying, what percentage of people that go to Harvard are successful? Okay. It's just education. It doesn't make you a success. You know what I mean? So like I would look at, like Harvard has proved that I have tenacity and a work ethic and at least half a brain, right? And those are the same things that are important to trading. So like going through the trading course, you will be better at fundamentals. You will get better at technicals. You will understand the markets more. You will have knowledge. Will it make you a better trader? Not necessarily. But it will prove that if you go through 45 hours worth of training videos or whatever it is now, you'll have tenacity and follow through and a work ethic at least. Right? Okay. So here's the thing. I've always told you guys, you could use any methodology you want. Brown puppy, you got to park that in the parking lot. Okay? I like your enthusiasm and your energy, but be careful. You're in my office, okay? So anyways, I don't care what methodology you use. I will make you a better trader. You can use what I do. You can get rid of 90% of it and still be successful. If you want to throw an Elliott wave on top of it, fantastic. Okay? But it's the patience and discipline and really the consistency, which is, by the way, that's all that trade planning is consistency. Okay? Are you a bull on the Canadian dollar, yes or no? That's a very basic question. If you don't know, you're not a currency trader. Okay? Think of it that way. How could a professional currency trader not have an opinion on the Canadian dollar? Okay? You understand? So you have to learn how to make that decision. Okay? And then you have to back that up with technical analysis. That's all. And I don't care what kind of technical analysis, but if you're trading, if you're buying the Canadian dollar because you're a bull, everything else falls into place like clockwork. Okay? Okay? And I'll tell you why. Okay, if you're a bull on the Canadian dollar, so we'll use CAD yen since I'm here. This is a buy zone. This is a buy zone, right? This is a buy zone. 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 And this is a buy zone. Okay. So we'll take that. So all you're doing now is you're a buyer. Did you have an opportunity to trade this particular week? Yeah. Did you have a chance to trade this week? Yeah. How about this week? No, out of position. Now you can use a 4-hour 21, but I guess I'll mark that because this is out of the training course. Now, we get stuck on an R1. That's a huge red flag because we don't trade R1s. Okay? Oh, I marked this one incorrectly because it's price. Hang on, I got to do this one differently. This is the buy zone, sorry, and not the other one. Okay, so let's go back. Okay, do I buy this one? Hell yeah. Did it work? No, sorry. Did you try here? Yeah, it only worked for a day before it died. Okay. Do I trade in here? Yeah, you probably did. And then did you trade here? Yeah, you probably did. So let's try to quantify now. Yeah, probably profitable, right? Probably profitable. Probably profitable. And then what? Another out of position trade. I don't know if you're buying that many out of position trades. But in here, there's a loss, right? And in here, yeah, it's, you know, it was up for 2, 3, 4 days. So there's a profit. Okay. This one, I'll count this as a loss, but you had a day and a half to move your stop. But let's say I'll count that as a loss. This one, I'll count that as a break even. Okay. And this one, you're on your way again. Probably profitable. So 1, 2, 3, and then we'll take this, wash this off. Profit loss, so we'll wash these out. This doesn't count. So you get 3 winners. Because the losers offset the winners, right? Now, the importance of your winners being smaller than your losers is that this actually adds up. This loss doesn't wash out the winner, right? And this loss doesn't wash out this winner because these 2 losses equal 1 winner, so you actually get like 4, but whatever. Okay? Now the interesting thing here is the opposite. Okay? Are there obvious sells here? 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 Oops, I missed one. Right? And are there obvious sells here? And is there an obvious sell here? How many of those are tradable to the downside as a bear? Okay. And this one's pretty questionable. This one was profitable for a day. So is that a loss or a break even? Okay. This one never happened. This one, I don't know. This one's tricky because it went up before it came down. But it's plausible you jump back in. But this one definitely is, right? And this one definitely is. So there's this one's a maybe. Okay. This one's probably a break even, right? But this one was down for 8 days in a row. You probably made money. This one was down for 4.5 days in a row. You probably made money. Okay? And what I'm trying to get at is it's the consistency that's most important. Okay? Ed says, Wayne, way back, can't remember, but did you do a course on game theory? My first exposure to game theory was, you can Google this, it was a great class. It was called International Political Economics. And the professor is a rock star. He's written a lot of books, goes on tours. You see him on TV all the time. I can't remember his name. He knew the subject so well that he didn't keep notes and he didn't have a PowerPoint presentation. He'd just come in and start lecturing. So anyways, part of this, because this is the economics between countries, basically, okay? And you could have like China on one side, and you could have the US on the other, and sometimes there's war, so that, right? But it's it's political economics, okay? So it's always relative, just like currency trading, so widgets and gadgets and all this kind of stuff, and the politics that goes in between. So part of the mathematics of deciding, let's say risk, if you were going to invest, not just buy like invest in the market, but like build a factory and all this kind of stuff, you have to look at like probabilities. So what are the odds that the war with China, the trade war with China, comes to a complete end? Well, almost zero. What are the chances that at least the first agreement is done? And I'd say somewhere closer to 100%. And so you start doing all these things, and then you can start calculating the math. And so then once you learn the math and probabilities, then you have to go into game theory. Because it's not just the math, because you can say base case, best case, worst case, and come up with different probabilities. But then you need to understand the political side of these economic questions and say, how does China respond in such a way to save face with its own constituencies? And same thing with the US. So it might be in their best economic interest to make a deal, but then there's politics involved, right? And so anyway, so game theory, I think we covered it in 2 or 3 classes. I enjoyed that thought process so much because it's just pure logic, right? Then I signed up for an entire course now on game theory. And what was his name? Boz, I think, Professor Boz. And he's well known for game theory. And so I took the whole 14-week course on game theory and, logic branching and stuff like that and probabilities. And it was pretty intensely heavy in math, but it was very interesting. And then it's come up more recently, I think, in my last finance class. I can't remember what I did last semester, but whatever I did last semester, I think it came up again, and like half of a lecture it came up again, and so at that point I was pretty experienced. Okay, but it's a very interesting topic for sure. Pro trader, you mean hedging hedging out of a bad trade? Pro trader? Let's cover that. Pro trader says, what's my opinion on hedging? So let's define what you're talking about first. Do you mean hedging a bad trade? Mellet, take the swing trading course. Yeah, Ed. Harvard, absolutely. I mean, it's just math, right? So after my game theory class, then I did statistics, which was also really interesting because, you have to cover things like the math of probabilities and stuff. Yeah, I know what hedging is, but I want to know why you would not want to make money. So what is the reason behind your hedging? Because I can show you how to do it, but I want to know why. Because that's what hedging is, right? It tells you that you are not going to make money. So what is the reasoning behind you selling and buying the same currency? Well, okay, so we're going to talk. Michael says, back when we were doing binaries, I showed how to use binaries as a hedge position against a cash position, but that's kind of where I'm leading towards. To minimize exposure, then like I think the cash Forex market is just not the right means for that. I mean, right. So usually it's misunderstood and not done properly. Let's put it that way, pro trader. Okay. And reduce risk. Yeah, but it doesn't make any sense. There are other mechanisms for that. And I don't know, there's like not a lot of benefit. How about this? Doing that would be a very, very expensive way of doing it. Okay. So let's do this. Let me go to exotics to make a big point. Okay. Let's make a big point here. So we're going to talk about hedging now. All right. So here is the Euro Turkish lira. Okay. And there's trades on this. And I say, okay, I'm worried now that this upward move is going to take me out of my trades. I could take my profit because I got a trade here. I got a trade here and I got a trade here, something like that. Okay. So I could exit the trade and just walk away. Done. Or I could hedge it, right? So the worry here is that even though I'm short, I think what you're asking me, pro trader, is could I now go long and hold that long position against my short and therefore I don't lose money? By the way, Ed, game theory has to do with more of a behavioral finance. Okay, so every class starts with prisoner's dilemma. Okay, so it's interesting. Look it up. Read it. Yeah. Okay, so great. So pro trader says yes. To offset the money I'm losing here, I long. Okay, let's look at the facts. Okay. So if I'm short this pair, I make 1,700% a year in interest. 1,700 because of my leverage. Okay. However, if I'm long, I pay 6,240% in interest. just in interest, it will cost me 6,200% to be long, to offset. Okay? So I use this one because it's so obvious. Now, I use binary options in old videos because I could get this exposure without paying interest. So I could be short and make 0 pips. You understand? Because I'm long in the binary or the options market or the futures market, right? But I'm short in the cash market. In the cash market, I'm earning 1,100%, after expenses and stuff. I'm earning 1,100% a year in interest. Okay? And if I'm short in the cash but long in the option, I make 0 pips. And I make 1,100% in interest. Well, that's pretty good. Of course it's good. That's why I taught you that like 6 years ago. So let's dive in differently. Now, first of all, let me just finish that thought. Okay, pro trader. So binary options are not really an option anymore, but you could, let's say you or your client that says, hey, can you hedge me on this? Well, first of all, you wouldn't use cash Forex. You would use options. You would use futures. Okay? So you'd be short the cash. You'd be short the cash, but long the derivative, like an option or a future, for example. And the reason for that is you're exposed to the upward movement in asset appreciation, in which you are losing because you own that in the cash position. So the money you're making on your derivative is offsetting the money you're losing in your cash. But these options and futures don't charge interest rates because they're derivatives. So now you're stuck with an asset that's making money and losing money at the same time, hopefully the same amount, and you're collecting 1,100% in interest. So now you're going to be guaranteed to make your 1,100%. So that makes sense, right? So to do it a different way, the way you asked me, what's my opinion on being long and short at the same time, doesn't make any sense. Makes no sense. And then the most common reason that people do it is because they made a stupid trade. And because they make stupid trades, they've made yet another stupid decision, and they've decided instead of taking the loss, they're going to hedge it. Garbage in, garbage out, dumb decision leading to a dumb decision. And now they might be minimizing the loss in pips, but they're losing money anyways on their carry, okay, which makes no sense. And also, why is your loss so big that you don't have the guts to take the loss? Oh, well, Wayne, I'm down 300 pips. Well, then you're stupid. Sorry. Where have I ever recommended holding a trade to negative 300? Never in my life. I said have a trade plan. Have clear rules of engagement for support and resistance. We know exactly where to put our stops in the swing trading group. It's not a debate. It's not emotional. And if you lose 78 pips this week because your swing trade failed, good, take it. Take the loss. Take it. Okay? A 78 pip loss you can recover from. And that is a 78 pip loss is way better than a 5 pip win. A 5 pip win is another stupid idea. It makes no mathematical sense to have a 5 pip winner. Oh, but Wayne, I have a high winning percentage rate. Oh, so you're really good at not making money. Nobody cares about your win rate. How much money did you make? So a 78 pip loss means you were wrong. You were way wrong. You made a trade plan. It failed, but you were wrong. But the funny thing is, you're not wrong that much because you do analysis first and you have things planned out days in advance. You're wrong, but you're not wrong that often. And when you're wrong, you're not horribly wrong, but you're definitely wrong. See, I want you to be definitely wrong. I don't want you to be unlucky like, oh, I bought it at support, but I lost 12 pips. Oh my God. You bailed on a trade because you're out 12 pips. I got scared. Or it was 30% of my trading account. Those 12 pips were so unbelievably expensive. You're like, oh my God. Those are all loser attitudes toward this business. This is a business. It's economics and finance. That's all it is. You must understand the name of the game here is cash flows over long periods of time. Compounding. And we make our decisions through economic analysis. That's all this is, right? The gambling stuff starts with poverty and leads to poverty. Okay? So, how do you do it right then is the next question, right, Pro? Here you do it, Pro. Here's what you do. If I was worried that this is reversing, and then of course in a scenario of reversing, it would destroy my profitable trades, right? Cool. Okay, cool. So how do I deal with it if I wanted to hedge? Here we go. You ready? Here we go. By the way, this is nice swing trading. You buy it here, you exit there. You buy it here, you exit there. You buy it here, you exit there. Exit. So let's change our view here. Let's change the tools we're using. And I'll redo it. Different pivots this time, but the logic is still the same. You're a buyer and you exit. You're a buyer and you exit. You're a buyer and your exit's up here. What am I doing? No, Jimbo, never, ever, 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 Jimbo, never, ever take a small winner. Never. It's 1,000 times better to have a -5 than a +5. Never do it. Okay? Never. Because you're going to kill your statistics. You're going to kill it. Destroy. Okay? Okay, what am I doing here? No, well, being consistent, sure, but everything you do is already consistent. Okay? What am I doing here, guys? Buying low, selling high. Yeah, but everything we do is buying low, selling high. What am I doing here? I'm day trading. So you swing low. And by the way, I've been saying this for 15 years, right? I forget how I do the other one. Swing low and... Anyways, so you day trade long. Okay? See, guys, if you buy it here and exit, how many pips do you make? Well, you make from there to there, whatever that is. How much interest am I charged? How much? Remember, if I hold this over long periods of time, it's going to cost me 6,000%. So if I go long one standard lot, I will have to pay $6,000 a year to hold that trade. So I need at least 600 pips to break even. Okay? If I exit here, how much interest do I pay? Zero. Zero. You don't pay interest until rollover. So the next day, you buy it here and you exit. This is just standard, boring day trading. You made this many pips and you pay 0%. Okay? And then today, you bought it down there. Your target is going to be up here. And between now and 5 p.m. New York time, you must exit or you pay interest. You don't want to pay interest on your loan. Okay? Okay? So meanwhile, when this goes up, you lose. You have a loss on opportunity cost because you could have just taken profit, because remember, your cash position is short. So every time this goes up, you had the opportunity to get out, but you didn't take it. So you haven't lost money. You're just giving back floating profit and loss. Okay? But if you made money here, now there's that many less pips you've lost in opportunity cost. And now you've made these pips, and now it's that many less in opportunity cost. And now this is happening again, and maybe you have an opportunity to offset your opportunity cost lost. And sometimes this actually benefits you because you have this move here where up and down. Okay, so let's dumb this down. Let's say you made 100 pips here and you made 100 pips here. On day 1 and day 2, you made 100 pips because you bought here and you exited here. You bought here and you exited up here, right? But here's the thing. When you add up the total move over the period of time, it only moved 250 pips. No, wait, I didn't get that. Hang on, I messed up. Over the course of that time, the distance from here, let's do this in yellow maybe, the distance from the bottom to the top, that's only 150 pips. But because you went here and exited at the top and bought it back on the dip and went to the top, you made 200 pips on a 150 pip move. Okay? And then you bought it, right? Then you exited here at the top, and then you bought it back down here, which is a 50%. So it went up 100 pips here, and you bought it back at the 50 pip point, and now then up again, right? So when things go well, so by day 3, right, the market is up 250 pips and you're up 300 or something. You get what I mean? Because you keep buying dips and exiting high. And by the way, you're like, well, how do I know where to buy? That's swing trading. This is just simply day trading. This is just boring, absolutely straightforward day trading. Okay? Easy peasy lemon squeezy. Okay, so that's how you would do that, okay, pro trader? Boy, isn't it nice you have a coach that can answer your questions like that? I hope so. Would you please show that by leaving a thumbs up and comments today? Will you please leave a comment on today's video and also like? And if you're new, would you please subscribe? Yeah, and Ed is making connecting the topic here. So you bought it here, you bought it here, you bought it here. You've offset more pips than you lost in the opportunity cost, and you're still earning 1,100% a year on your other trades. Yeah. Okay. And then you get these other benefits too, where, you're sitting on trades and some things go up, some things go down, right? That portfolio is just earning money for weeks and weeks and weeks and weeks and weeks and weeks and weeks on end. And suffering like no volatility. What has the volatility been like on these 6 trades? We've been sitting somewhere between 3,100 and 3,400 pips. It's actually more than that because this is supposed to be, right? So anyways, it's been sitting roughly this amount of money for weeks. There's like zero volatility. And every day I get paid. How cool is that? Yeah, swing traders, did you guys want to meet today? There's not really swing trades to set up over the holidays, but I think we talked about getting together for milk and cookies and stuff, but I haven't sent out emails or invitations. Yeah, Michael, that makes it easier. Okay. Makes it much easier, Michael. And then also, if you're stuck with the first in, first out issue, then you would have one account that makes the short trade. And then you'd have a second account. Okay. Then you'd have a second account for day trading it as a hedge. No, there is no Friday, Jim. Okay. Yeah, there's nothing going on Friday. Spend time with your family. All right, so, okay, well, have a wonderful holidays. Remember, you cannot be happy unless you're grateful. And thankfulness is a part of gratitude. So you can have all the money in the world and not be happy unless you're grateful for what you have. So that Lamborghini is not going to fill the void in your heart. The bigger house, the fancier watch, they very quickly just become nothing again. So the only way you can find happiness in this human world of ours is for you to be grateful for what you have. And this is why some of the poorest people in the world may be some of the happiest people you've ever met, because they're grateful for what they have. Okay? So I am grateful to have you in my life. You keep me focused, you keep me sharp, you keep me interested. It's easy to slide into mundaneness, and that's a dangerous thing when you're trading money, right? So it's imperative you stay smart and engaged and focused, and so thank you very much. I'm grateful to have you in my life, and I give thanks for that. So thank you for all the hard work you put into this. Thank you for being a positive member of our community, and I will see you on Monday. If you're in the swing trading group, I'll see you for milk and cookies later today.